Trading is fundamentally about making correct decisions under uncertainty. For decades, financial firms have relied on powerful classical computers executing complex algorithms at incredible speeds, analyzing market data, identifying profitable opportunities. They defined electronic trading, high-frequency strategies, sophisticated portfolio management. These tools process millions of transactions and data points every second. Yet even these machines hit limits as global markets grow more complex. Built on binary, ones and zeros, many problems still force an inherently sequential approach. Now, a new paradigm: quantum computing. Not just faster, fundamentally different. Instead of classical bits that are 0 or 1, quantum computers use qubits. A qubit can be 0, 1, or both simultaneously. Superposition. This enables exploration of vast possibilities at once, scaling power exponentially with each added qubit. Massive parallelism could be a finance game-changer. Many trading challenges, portfolio optimization, complex pricing, are combinatorial, exploding in possibilities and overwhelming classical machines. Today's trading infrastructure is a marvel of classical engineering. At its heart, powerful servers and software built for speed. In HFT, success is measured in microseconds. Firms invest billions to sit next to matching engines and shave nanoseconds from execution. Classical algorithms power statistical arbitrage, market making, and algorithmic execution. They process linear data streams efficiently and execute rules at lightning speed. A system can detect a discrepancy and execute a trade in a fraction of a second. Markets generate astronomical data: trades, quotes, news, economic reports. Machine learning parses it for predictive patterns, including sentiment-derived signals. But dimensionality and complexity strain these models. Subtle nonlinear correlations can be missed. Portfolio optimization seeks maximum return for a given risk via heavy matrix math. With thousands of assets and constraints, finding the true optimum is intensive. Heuristics find good enough answers fast, but can miss the global optimum. Risk depends on Monte Carlo, thousands of simulated paths to estimate losses. Vital but time-consuming, real-time comprehensive risk during volatility is often prohibitive. Powerful, yet bounded by classical physics and binary logic. Quantum computing brings an entirely new toolkit, starting with optimization. Imagine an enormous landscape of portfolios, countless peaks and valleys. A classical computer hikes one path at a time and may get stuck on a local peak. Quantum annealing surveys broadly, raising the odds of finding the true global peak. That means better balanced portfolios, higher return for the same risk, or same return with lower risk. Quantum ML can surface intricate, non-linear patterns invisible to classical models. Think oil prices, multi-currency moves, and regional weather, analyzed as one interacting system. A 2019 collaboration showed a quantum approach to option pricing, hinting at future speedups. The edge isn't just faster execution, it's slashing pre-trade compute time. Complex derivatives can take time classically, adding uncertainty and risk. A quantum algorithm could potentially deliver exponential speedups in valuation. Near-instant pricing empowers better quotes and faster opportunity capture. Quantum could run millions, even billions, of scenarios in a fraction of the time. Firms model credit defaults or geopolitical shocks with unprecedented detail, exposing hidden vulnerabilities. Risk moves from historical to real-time predictive, enabling dynamic hedging to prevent catastrophic losses. 4. The real-world gauntlet: hurdles and headwinds. Despite promise, quantum trading is not plug-and-play. Today's devices are NISQ, small and noisy. Errors from temperature and electromagnetic noise cause decoherence, corrupting calculations. Until hardware scales and stabilizes with error correction, achieving true quantum advantage is hard. There's a talent gap at the intersection of quantum physics, computer science, and finance. Success needs physicists, engineers, and quants who translate finance into quantum algorithms. Quantum logic can be non-intuitive, tough to debug, validate, and interpret. Models that shine on history or sim may fail under live market dynamics. Rigorous backtesting and stress testing are essential, yet not foolproof. Building quantum hardware is expensive, accessible mainly to tech giants and a few startups. Cloud helps but remains costly and limited. Early access could widen gaps. Regulators must adapt to ensure fairness and stability. This isn't about replacing every server. It's about targeted, hybrid leverage for intractable tasks. Quantum processors and classical systems will work side by side. 5. The path forward. A prudent quantum strategy. Quantum trading will arrive gradually, not overnight. Given hardware limits and model risks, full replacement is neither feasible nor wise. Pursue measured, strategic adoption. Start with small, well-defined pilots, portfolio optimization, and specific derivative pricing. Aim for capability building, not immediate profit. Collaborate with tech firms, universities, and startups. Combine real-world problems with quantum expertise to share cost and speed progress. Engage regulators early to ensure compliance and stability. Near-term, integrate QPUs as co-processors in classical stacks. Classical handles ingestion and execution. QPU tackles compute-heavy kernels. Example: classical narrows candidates, quantum finds optimal weights. Leverage both strengths without overhauling proven systems. Widespread adoption may be years away. Preparation starts now. Quantum promises gains in optimization, data analysis, and risk, with technical, financial, and operational challenges to navigate. Don't wait or dive in blindly. Pursue active, cautious exploration. Invest in pilots, build multidisciplinary teams, foster partnerships, and focus on hybrid solutions. If you enjoyed this breakdown of quantum trading explained, don't forget to like, subscribe, and hit that bell so you don't miss future deep dives into the tech shaping tomorrow. And let me know in the comments. Do you think quantum computers will make trading fairer or more dangerous? Until next time, this is Techie Treks, where technology meets the future.